Hello Maverick traders, this is Imri and welcome to today's currency recap. Tomorrow the markets are closed, well equity markets that is. FX and crypto will still trade, but volumes are likely to be lower. And as an interesting trivia aside, I can't remember the last time that we had non-farm payrolls on a day that the market was closed, which is going to be tomorrow's highlight event, is the unemployment reports. And we're going to have a chance to see if the labor market is finally starting to crack or not. So all of this means that the likelihood of a gap up or a gap down on Monday's open is quite substantially high, I would say. So in today's trading, the S&P Total World Stock Index both ended the day higher. Cryptos are drifting a little bit. Gold was slightly down and oil very slightly down. Overall, we can see that we're holding above this 4060 to 4080 support region in the S&P 500, and the next upside target for bulls is 4180 to 4200. It's a very similar story in the total world stock index. We're trading above both moving averages right now. The market just needs to push to that 9450 level where we have upside resistance. Now, in terms of the cryptocurrency markets, I'm going to take it one leg at a time. And I think the next leg is going to be to the upside. We have this beautiful high base here in the crypto basket, but you can see this high base most clearly in Bitcoin. So if I had to trade a cryptocurrency right now, I'd be looking for that breakout in Bitcoin higher to carry us to roughly the 32,000 level, maybe slightly below. In terms of the weekly calendar, so for tomorrow, all eyes are going to be on the employment reports. That's what's going to be in focus. And as far as a market rating goes, we're going to stick with the +2 here, as the slope of both moving averages is still neutral. Okay, so moving on now to some currency analysis. Okay, so cryptos did not have a great day today, but relatively speaking, they're hanging in there. Even Litecoin, that was the biggest loser on the day today, is still broadly trading in a sideways range, basing. Okay, on the fiat currency side, interesting day here with the Swiss franc and the euro taking the lead. Dollar got a bit of its shine back. The pound also held its own. And then the Kiwi and the Aussie were the two biggest losers. And the yen started the day off quite strong, but gave up a lot of those gains as equity markets came roaring back. Now, in terms of velocity, it's pretty stark contrast here between what the euro and the Swiss franc are doing and what the Kiwi and the Aussie are doing. So you can bet that that is exactly where our focus is going to be as we head now into some possible trades. But I'm going to go through all the baskets, starting off with the Japanese yen. I'm still looking for one more significant push lower in terms of yen weakness before I see yen strength return. So I'm looking to broadly speaking sell the yen here. Now, in terms of the dollar, we're still trading in this falling wedge. We got that push down that I was calling for last week. You can see that, the red arrow here. And we're in support right now. We have some pretty reasonable support today where we traded yesterday and Wednesday. We made this nice indecision candle followed by a strong bullish candle today. We'll have to see what tomorrow's news report holds. I think it's going to help determine the direction of the dollar for at least the next little while. But ultimately, I'm looking for a breakout of this falling wedge. If we break below this support region, then the dollar index is almost certainly headed to new lows, and as is this dollar basket. Okay, so the Swiss franc, we're trading back above the broken resistance line, which I guess is now behaving as reasonably good support, and we're trading higher. I still expect a big sell-off in the Swissy, however. I still see this rally as a counter-trend rally. The only thing, frankly, that would change my mind is if we break back above the March 13th highs here. Now, from a lower time frame perspective, on the 4-hour time frame chart, we are starting to get quite overbought. And this pattern from a short-term perspective, again, is starting to look a little bit like a rising wedge. There's no evidence that the wedge is considered complete yet. We'd have to break below the Wednesday, April 5th low for that to start being a likely possibility. So although my bias is to the downside in the Swiss franc here, it is putting in a good show, but I'm likely to become a seller here as I believe the Swiss franc is getting quite overbought. Now with the euro, so we broke through that resistance area that I've been talking about for a few weeks now, and we're now heading into our next resistance level, which is the high from May 2021. Now that's fairly minor resistance, so I wouldn't be surprised if we eventually break through and start targeting the highs from December 2020. So overall, you know, I still do see some broad-based strength here in the euro. Now in the Great British Pound, I still see upside. I think, generally speaking, I want to buy the pound and find good liability currencies. And I think we're headed back to the highs from February 2022. Okay, Canadian dollar, we're just trading sideways. I still see this as a range-bound market. We bounced off bottom support last week, and we're now heading towards this upside resistance. The Aussie dollar. So I said I didn't really care about the Aussie dollar so long as we were stuck in this box. Well, we broke below that box and we touched the next support downside target. I wouldn't be surprised to see more downside in the Aussie. I think we're going to take a run at the December 2021 low, which is this next red level below there. And then the Kiwi still hasn't successfully broken out of this falling wedge. So we might see some further downside here, potentially another test of this lower support line before the Kiwi finds its strength. Okay. All right, so those are the currencies I'm looking at there. And as you can see, I do like the idea of pairing the pound against the Kiwi dollar in the short term, against the Aussie dollar. Same with the euro against the Aussie dollar as well. The Swiss franc I'm less convinced in. But given the strength that we've seen in the Swiss franc over the last few days, if the right chart setup is there, then I'd consider pairing the Swiss franc as well, you know, against the Aussie and Kiwi dollars. And then once the dollar, the US dollar, finds its proper bid and breaks out of the resistance line of this falling wedge, I will definitely turn into a dollar buyer once more. Okay, so those are the possible trade setups. I personally don't think tomorrow's a trading day, especially with how low the volumes are going to be. I mean, I'll be watching the market, but I can almost guarantee that I will not be placing any trades. So like I said earlier, the potential for a large gap on Monday in equities is there for sure. I think the dollars can be in focus tomorrow. FX volumes will be lower than usual, but that doesn't mean you can't see a big move. In fact, I'd say the propensity or the potential to see a big move tomorrow is elevated considering the importance of that unemployment report and the lower trading volumes. All right, traders, that's it for me. Hope you found this recap helpful as always, and I will see you guys next week.